What's up, everybody? Welcome back to another video. In this one, we're going to be talking about a little different option strategy than you might be used to. Okay, so instead of just buying calls or buying puts, there's other strategies you can use that have a higher probability of profit than just buying naked calls or puts on Tesla, for example. But before we get into the video, check out the link down below. Webull's still doing the promotion. You open an account, you get 2 free stocks, and if you deposit $100, you get 2 more free stocks. So a total of 4. All right, so click that link down below. That'll be going until the end of the year. But yeah, so let's get into what we're going to talk about today, and I'm going to give you a live example of a trade that we took in my room. A trade that we took in my account and in my trading room, on Peloton. So that's what we're going to talk about. It's called a put credit spread, okay? And we're going to hop on the screen and we're going to show you, or I'm going to show you exactly what I mean and how I made money with this specific play, all right? So let's get right into this laptop right here. We're not going to use the 4 screens. We're going to use the one laptop for this one, all right? Let's do it. First, let's take a look at Peloton, all right? So we can see on the chart that this thing has just been on a roar this week, or for like the past week or so. We had some support down here at 108, and today this thing's up at 134. Now, the trade we got into, I'm gonna break it down, and I'm gonna show you exactly how you can enter it, and kind of, the strategy behind what selling a put credit spread means. So, yesterday is when we got into this play, all right? So yesterday we saw the momentum was continuing and Peloton was, running up really quick at the open. So I wanted to bring in some income. This is called an income play for this week. Usually on my options, I'm going a couple of weeks out when I'm either going long or short something. I'm usually going a couple weeks out or months out on my options contracts. Just to give myself time. But for something short term, like something that expires the same week, like this example, I like to sell premium, okay? So that just means you're pretty much just collecting income, and the risk to reward isn't so great on these trades, but they have a higher probability of profit because you don't need the stock to move in order to make money, okay? So in this case, when we got into this trade, Peloton was up around 126, okay? So what I did was I bought a 120 put and I sold a 125 put. So that is a put credit spread. You're selling one and you're buying one, and you're selling to open, okay? So let me just break this down real quick. Selling a put credit spread, it's either bullish or neutral because as the stock goes up, the price of these options are going to decrease, okay? So when you buy a put, what happens when the stock goes down? The price of the put increases, right? You're making money. Now, what happens when you do the opposite and you sell a put? Well, if the price goes up, the put loses its value. This is what we're doing here, all right? So pretty much what we're doing is, let's say the stock is at 125 like Peloton was. We buy the 120 puts and you sell the 125 puts, okay? So you're pretty much covering yourself when you're buying and selling at the same time. You're lowering your risk, all right? So when you sell naked puts, you open yourself to a lot of exposure because if the stock just continues to drop, well, those puts are getting more expensive, and guess what? You have it naked, so the losses, you just have too much exposure. Now, when you buy and sell at the same time and create a put credit spread, you reduce that risk significantly, okay? So in this case, we just needed Peloton to stay above 125, and we would collect the full premium on this trade. So we got into that this trade on yesterday. So yesterday, I'm just checking right here. Yesterday we got in around 4 p.m., right before the close. At 3:56 p.m. we got into this trade. And usually what I like to do with the spreads, if I could collect 80% of the max profit, I'm going to do that. I'm not going to wait, the extra day for the final 20%. Just, why not? Why not just take the profits off the table and look for the next one? So we could see on the day, 890 bucks. Pretty much what I did was, like I just said, I bought the 120s and then sold the 125s. That cost me about $1.17. And today I was able to get filled at 23 cents, so, or 24 cents. So that was about 80% of the premium. So pretty much I sold some premium on Peloton. Even if the stock did not move today, I would have been making money if price was just above 125. So as long as it stayed above 125, I would have collected money on this trade. And you really don't need price to move. You just need it to stay still until your expiration date, and you collect the full premium. So on this one, I sold about 10 of these, and yeah, I collected the full, or almost the full $1.17 credit. I collected about 80% of that. So yeah, it was a good day on Peloton. Nice and easy trade. Peloton is still running. And yeah, just wanted to let you know how to do that. Or now I'll actually show you how you enter one of these trades, okay? So pretty much what you would do, you would go into your trade tab, all right? So pretty much we're gonna open a put credit spread right here. I'm gonna show you what it looks like, all right? So let me exit that, go up to trade, and then we'll go to Peloton. So let's say I wanted to do another one for tomorrow. So price is at 134 right now, and let's say, you know, we want it to stay above 130. Okay, so we'll use 130 support level as one of the legs here. So we'll go into trade, and we'll go over to the put column, right? Go over to the put column, and then we're gonna go sell, okay? We're gonna go sell, and then you go to vertical. So you right click, right? You right click, you go to sell, vertical, and now, let me see real quick. Now we go to, let's say 130, right? We're gonna go to 130, and then we're gonna adjust this to 125, okay? So we're gonna sell the 130s, and we're gonna buy the 125s, and that would give us a 78-cent credit, okay? So if Peloton's above 130 by Friday, we'll collect the 78 cents credit, right? And all you have to do is click confirm and send. So you can see the risk to reward on these plays isn't so great, but that's why the probability of profit is so much better than just buying a naked put, or, you know, buying a call, or just selling a call, selling a put, because the probability that you're going to make money on the trade is a lot greater in this case when you're, you know, selling premium. This is what all the Wall Street guys do. They love selling premium and just collecting money week after week. And literally this is one strategy that you could use forever. All right. You could use this alone. You don't have to do anything else. You could just always sell put credit spreads. If you see a stock that you think is going to continue moving higher or stay above a certain level, use a put credit spread, all right? So that's pretty much it. Basic little recap. When you're selling a put credit spread, it's either bullish or neutral, because as the stock goes up, the price of those options decrease, and you collect premium. So you're a seller of premium, all right? So I gave you an example. I gave you a live trade that I made money on this week. So yeah, that's pretty much it. I hope you guys can use this to your advantage. If you have any questions, just comment down below, and I'm gonna make more videos about, you know, different kind of option strategies that you might not know of yet that, you know, you could utilize, all right, on a day-to-day basis. But this is all the stuff I teach in my course too. Exactly how to do this stuff, when to do it, why to do it, how to do it. I think I said that already, but yeah, if you want the course, it's literally A to Z, everything you need to know about options from beginning to start to more advanced stuff like this. And this isn't really too advanced. This is very easy to do, all right? So yeah, hope you guys enjoyed this little lesson. I'm gonna keep putting more of these. If you guys like them, you know, give me a thumbs up. If you didn't like it, give me a thumbs down. Sorry to hear that. Let me know why in the comments though, so I can make next one better. But yeah, that's how you sell a put credit spread, and that's how I made a little under $1,000 on Peloton with very little effort. Very little effort. All right, so I hope you guys enjoyed. Have a great night, and I'll see you on the next video.